There are numerous advantages to investing for dividends. Now, I myself absolutely love investing for dividends. It's so rewarding when you see real money being deposited into your bank account month after month, quarter after quarter. You get to literally watch compounding interest happen right before your eyes. Nearly 60 to 70% of my holdings are centered around dividend-paying stocks and dividend-paying ETFs. Investing for dividends is really rewarding, but it's important that we know the pros and cons before we start going down the path of deciding on an actual dividend investing strategy. In this video, I hope to go over those pros and cons with you as we cover what I consider to be the largest pros and cons when it comes to dividend investing. Let's get started. Let's start with the cons first. Let's get the bad news out of the way. The first con of dividend paying investments is that the dividend payment is it's not guaranteed. If the company you're investing in starts to experience financial hardship, the dividend payment might be reduced, suspended, or completely cut for an unascertainable amount of time. Ford, General Electric, and PG&E are all examples of companies that you can look back in time and see that they've either cut their dividends, suspended their dividends, or changed their dividends altogether. Knowing that your dividend payments might be cut and your income might be reduced, it's very important, at least in my opinion, when it comes to dividend investing to make sure you're well diversified. The second con of dividend investing are taxes. With the exception of the Roth IRA, dividend payments are usually taxable when received. And as you guys know, and I'm sure you understand that, as taxes can eat away at an investor's return over time. And so it really does reduce the amount of return you get on your investment because every year you have to pay taxes on those dividends. An investor who is investing for growth does not have these same kind of problems. So let's say they invest in Amazon. Well, Amazon doesn't pay a dividend, right? Well, the investor, if they hold Amazon and watch its value grow, the value it compounds at grows completely tax-free until the date they sell it. But not with dividends. We have to pay tax when it's received. The third con of dividend investing is you might experience slow growth or very minimal growth on your investments. Well-established companies that pay dividends might provide little to no capital appreciation on the underlying investment asset. So in other words, your upside potential is a little bit limited. Now, companies that pay dividends are companies that usually have been around for decades, some of them 10, 20, 30 years or more. This means an investor may be missing out on the potential capital appreciation upside of newer companies. Sure, it's always great to receive a 3 to 4% annual yield on these dividend-paying stocks, but if we're giving up the potential of higher capital appreciation on the underlying asset, well then, our returns are limited and thus our net worth might grow at a much slower pace. Okay guys, those were the stinky cons of dividend investing. Now, let's talk about the pros. The first pro of dividend investing is that you will immediately start to receive a return on your investment. It might be monthly, it might be quarterly, and it might be annually, but you're gonna be able to see real money going into your bank account. And that is so exciting. It's money that you did not have to go work for. It's money that is working for you. We get to watch compounding interest happen right before our eyes. Well, maybe you don't want this money. This is fake money, but it's sure fun to play with. The next pro when it comes to dividend investing is actually the tax consequences. Dividend income, I don't know if you guys know this, but it has one of the most advantageous tax rates. Next to tax-exempt income, it is the next best type of income you can receive. Much better than ordinary wages. Many companies, once you've held them long enough, once you've held the investment, usually for a year or more, may pay you a qualified dividend. And qualified dividends are taxed at the capital gain rates. Capital gain rates, I don't know if you guys know this, but it can range anywhere from 0 to only 24% at the very, very highest rate. So that's a huge savings if you look at wages. Now let's take ordinary wages for example. If we're in the highest wage bracket for tax purposes, we're easily paying around 40%. But if you make your living with dividends, you're only going to be paying at the very highest about 24% rate of tax on that income. So it's huge tax savings and a great way to make a living if you can have enough dividends coming in. The third pro of dividend investing is that companies that are well established and make good profits and good earnings tend to raise their dividend payments over time. This is a way that they can return additional value to their shareholders. Chevron, Procter & Gamble are two companies that are great examples of this. You can go to Yahoo Finance, you can go to history, and look at the dividend payment history, and you'll see that their dividends have increased steadily over time. You can look back at Chevron, for example. Less than 10 years ago, I think their dividend payment was around 50 cents. Well, now it's over $1 per share. And I'll be honest with you, I love to see when my income goes up, but I did no additional work to earn it. It is great. The fourth pro when it comes to dividend investing is probably my very favorite. And that is that when I invest for dividends, or when I have a dividend investing strategy, it saves me a lot of time and it takes a lot of the worry for me out of investing completely. You see, dividend paying companies, like I said earlier, are usually well-established companies. They've been around for a long time. And so knowing that, they're usually less volatile than many of the new smaller companies or many of these internet companies. And so what it means for me is like I feel good knowing I'm investing in a proven brand name. Companies like Chevron, Procter & Gamble, McDonald's, Kimberly-Clark are all examples of well-established dividend-paying companies. I really enjoy this way of investing because whether or not the market's going up or going down, I know I'm going to get income either way. I'm no longer so focused just on the capital appreciation. It's great if I get it. It's a bonus if I get it, but either way, I know I'm going to get a return on my investment. I'm going to be happy either way. The other thing I like about it is that it saves me a lot of time in research. Now, if I'm trying to invest for growth or trying to trade stocks like I used to, which I no longer do now, but it would take me so much time to try to research what was going to go up or what was going to go down next. With dividend investing, I don't have to worry about that so much anymore. I get more control of my life, more control of my time back, because I'm not worried about the capital appreciation side as much. Now, I'm not saying to forego research. I definitely recommend doing your research before investing in any company, whether it's for a dividend or not. But knowing that I'm invested in a strong brand name company with a long history makes me feel good, puts me at ease, so I'm not stressed about what I'm investing in. I can focus on my job, I can focus on family, and just the other parts of life that are so much more enjoyable. Even though I like stock investing and research, there's so many other things that are more enjoyable than doing that. And I'd rather be out living life than worried about my investments 24/7. And that's why that fourth pro is by far my most important pro of dividend investing for me. All right, guys, now those are my primary pros and cons when it comes to dividend investing. Now, what I would like you to do is think about all the things we just discussed and figure out how that aligns with your investment goals and your investment strategy. Does that make sense in your situation? Think about it. All right, guys, I know I went over this information kind of fast, so I'm sure you might have some questions, but either way, I would love to know what you guys think about dividend investing strategy. Do you think it's a good idea for most people? A bad idea? What do you guys think? What's your take on investing for dividends rather than always being focused on capital appreciation? I would love to know in the comment section down below. If you guys liked the video, let me know by hitting that like button down below. Share this information with a friend, especially if you have a friend who's saying, hey, what do I invest in? Or what's a way or method to invest? Share this video with them because they might prefer dividend investing as an investment strategy for them. Hey, and if you're brand new to this channel, I just want to take a moment to say welcome. Highly consider subscribing, guys, because this channel, Money in Life TV, is all about helping people like yourself become fiscally fit. We focus on this channel on teaching finances, investing, and taxes on a regular basis. All right, guys, thank you so much for taking time out of your day to watch this video. I really enjoy spending this time with you here today on YouTube. And no matter wherever you're at out there, I hope you have a wonderful week coming up. And I will see you guys in the next video next week. And until then, take care and live your life uncaged. Bye, guys. Peace.